Hi, welcome back to Ask Bob here at Bob Hook Chevrolet, where we answer your questions about the car business and car buying. Today's question comes from Amanda from Highview. And Amanda asks, Bob, how can I get the lowest interest rate on my car loan? So Amanda, I'm assuming you're thinking about buying a car and you want to do some financing. And I get that question all the time because I know a lot of people, very intelligent, educated people that just have a lot of mystery around car loans and they don't know what to expect as far as interest rate. So your interest rate will be determined by some things that are specific to you and your purchase. So the first thing is your credit score. The second thing is what interest rates are out there today. What's the federal interest rate? What are banks loaning money at? So that's a big factor too, and that changes month to month. The third thing is just the structure of your car loan. What term do you want? Do you want to finance for 48, 60, 72 months? What's the total dollar amount? What's the down payment, the percentage of the loan that you're putting down in down payment? So those three categories, those three things go together to determine what your specific interest rate will be. So here's my recommendation before you walk into a dealership or anywhere to buy a car. First thing is know your credit score. Your score is going to determine what risk you are to banks as far as loaning money. If you're a 720 plus, you are in a great spot. You're going to qualify for the best interest rates out there. The next tier would be about a 690 to 720. You're still going to get a good rate, just not the absolute best one. And then the tier about 650 to 690, 600 to 650, those fall into different buckets as far as banks look at what interest rate they want to loan you. If you're below a 600, that's typically what we define as subprime credit. You're really going to have to pay a higher interest rate if you want to borrow money, and there may be some extra hoops that you have to jump through. So know your credit score. The second thing I would do is go to your bank where you have a checking account, savings account, and ask them what you can get a car loan for. Tell them about the amount of money you think you're going to borrow, what kind of money you're going to put down, and just have them give you a quote. I just think you should have one pre-approval before you walk into a dealership or look at buying a car. You should be an educated customer. That's my kind of number one tip on getting the lowest interest rate, is be educated as what's out there and what you qualify for. So you've gone into a dealership, you've picked out a car, you've structured a loan, you've got it to about what payment you think you can afford. Here's where a dealership can really be a service to you. What we do is once we've structured the car deal, we send that car loan to about 10 different banks, 7, 8, 9, 10, 11, 12 banks, using a program called Dealer Track. We've loaded the deal in, and now we're letting banks compete for your business. And there's a couple of reasons why this helps get you a lower interest rate. They're competing to get business, first of all. And secondly, they're giving us wholesale rates on loans for cars, because we send them multiple car deals per month instead of just your one car loan where you may have walked into your bank. So that's going to help drive down the interest rate that you can get. You've got to get competition for your business. So those are my biggest tips for getting the lowest interest rate for a car loan. If you do find yourself in that subprime category, say the low to mid 600s or lower than that, that doesn't mean that you can't get a good affordable car loan. There may be some things on your credit bureau that you could address to bump your score up in a short amount of time. And it may limit your options as far as what vehicle you can get. One of the tips that we've given on one of our other shows is in that subprime category, a new car lease may be a great option for you because a lender knows that you're not going to have any expensive repairs out of pocket in that 3-year term. So there's a lot of things you can do, and we'd love to give you help and advice to find the right car for your budget. So I hope that answers your question, Amanda. Thanks for writing in. And anybody out there, if you've got questions for us, hit us on LinkedIn, Facebook, my email, bhook3@bobhook.net. And thanks for joining us today.